If we have a look at the key things that matter to us now, let's start with number one is the stock markets. Where are we at? Australia's fantastic, but we've always got the influence of financial things going on. Let's have a look with stock markets. We're in a situation where there's a lot of noise around. We've got a situation where everything is confusing. We saw earlier this year in the US, some of the banks that got smashed over there and fell over. We've had inflation being the dominant topic for most of the year. And we've also had recession talk throughout the year that has not eventuated. Most of it is noise, and you should ignore the noise. But inflation to me is the big thing. Everyone is targeting inflation, and particularly that's what the reserve banks around the world are going up and lifting interest rates for. But I genuinely do not believe inflation exists in the modern world, because inflation, I think, has been replaced by what I call greedflation. People put out prices that are higher than normal, and if people pay for it, fantastic. Now the easiest way to control inflation is not through interest rates, it's by the fact that if you and I as consumers don't buy the goods. If watermelon is expensive, don't buy it. I guarantee 2 weeks later, when it's about to go too ripe and be thrown out, it will be cheap. If you don't want to have inflation, be sensible with your buying. Don't lift interest rates, lift your sensibility and your spending power. But that's been the undercurrent in the world for the last little while. We've also got the fact that speculation still is the strongest dominant force in stock markets at the moment. Words rather than facts are being reacted to far quicker, far stronger than ever before in the history of the stock market. And that's concerning to me, because we're seeing a lot of volatility, and that's going to stay in throughout. As a result, I remind people all the time of the importance of having a high dividend strategy with your stock portfolio. You cannot anymore guarantee on consistent and reliable growth because the market is too volatile. What you can rely on is consistent and reliable dividends to make sure you've got a supporting revenue regardless of what market conditions are. So ever more, dividends is critical for you. As a result, Australia offers incredible value. You can get in there, and the dividend culture in Australia is significantly higher than most other stock markets in the world. And right now, with the dollar being so cheap, the value is off the charts. It's not uncommon to get a 5, 6 or 7% dividend in Australia, and it comes with tax credits if you live in Australia that will normally offset pretty much all of the tax payable. Or if you live overseas, it means no further tax to pay, and it's a tax-free revenue. So look for those dividends. They're the thing that keeps you safe and secure regardless of market volatility. And this volatility is not likely to go away any time soon. Now, I used to watch shares move up on a progressive line with a little bit of volatility, but lately I've noticed that they sort of just hit high and low bands and they stay there, because I think that makes them a lot of profit. This volatility is something we need to be mindful of, and it comes about because I think there is way too much money in the system. One of the things that everyone forgets is that every day, every week, every month in the world, a significant amount of revenue from the entire global payroll is put into a pension or a superannuation or a savings scheme to provide for someone's retirement. Most of that money inevitably ends up towards the stock exchange, and what that means is there's an enormous amount of capital coming in regularly, but limited amount of good quality shares. So the volatility has become more dominant because that capital has to be worked. It's a strange system, but it's right. As a result, I call it the era of the mini crash now. We've moved away from having to have big crashes. And bear in mind, when I started this update seminar way back in 2007, I started it because I was nervous about what was going on in the stock market, and there was a lot of strange things, and I wanted to give people a heads up warning. Even I didn't realize how big a warning that would become, but I think we've moved away from big crashes into the era of the mini crash, and let me show you what that looks like. So here's the stock market over the last 2 years, and you can see a mini crash I call more than 5% movement up or down, and you can see on all these occasions we've had mini crashes over the last 2 years. In total, 14 mini crashes in 2 years on the stock market. We don't need a big crash when you've got this many mini crashes. But don't be worried about it. And the reason you don't need to be worried about it is because after every mini crash, the recovery time now is so quick and so fast and so reliable that you just don't panic if it happens. You know, mini crash here, recovery, mini crash, recovery, mini crash, recovery, mini crash, recovery. That's what's happening. Now the thing is, big money is trading these mini crashes. You know, in and out 5% is a lot of money over a short period of time when you've got this level of reliability and frequency. And hence why the rich are getting super rich, the normal people are getting the crumbs. But this mini crash is the new norm in the world. And what it does say to you with your stocks and shares, don't look at the price. Look at the company, buy a good company at a good price with a good dividend and just let it be. You can see there still is a genuine upward trend. Over the last 2 years, we've seen the FTSE go up 27%. We've seen the Dow go up 17%. And we've seen the Australian market up 15% despite 14 mini crashes. So the bottom line is we don't need to be afraid of a mini crash. We just have to be aware of them. If you're lucky, you have a bit of money. So if you see a crash and you have some cash, have a splash. That's the new motto. Crash, cash, splash. And believe you me, with this regularity, you only have to save up every now and again, and you see a dip, buy in those dips, hold, get the dividend, have a happy life. But it's going to be the future just like this in my view, and you need to be aware of it so that you don't panic. The only time you would be worried about the stock market is if you were selling every time there was a mini crash and therefore copping those losses. But as long as you don't panic, don't sell and wait for the recovery, you will be fine. And that's the motto of the modern day stock market.